Accenture, which has reported a healthy set of numbers for the fourth quarter. The tech giant saw its fourth quarter revenue rise 3% to $16.5 billion. In fact, the company has also seen new bookings to the tune of a whopping $20.1 billion in the quarter gone by. The company has also forecast full year 2025 revenue outlook of 3 to 6% in local currency terms. Remember, that outlook was expected to be between 4 to 7%. So a slight difference in what was expected and what has actually come out of these earnings. And to discuss and decode what these earnings mean for the overall IT sector, we're now joined by Rahul Jain, the Vice President at Dolat Capital. Rahul, thanks very much for joining us this evening on ET Now. Now, Accenture in many ways is tracked very closely right here in India as well to try and get a sense of where the IT sector is headed. What do these earnings tell you? I think it's a mixed set, but what is your opinion of where the numbers stand and what do they say about the sector overall?
I think the guidance itself is a very wide number, and when you get this kind of a guidance, you always feel like at the lower end it's a bad number, at top end it's a respectful number. So these kind of numbers are always very difficult to take a clear bet on, and the wide band that to at such a lower number will make you think that the company itself is very indecisive about it. So I think it does not add to any comfort or discomfort as such, and we would rather look at the earning commentary that Indian IT company would provide over the next couple of weeks as they deliver their Q2 results, and that would make a better sense to us, I guess, rather than reading too much into this one.
Okay, I think when you see the earnings snapshot, the biggest, one of the biggest highlights is about generative AI that is seeing bookings of $1 billion for the quarter. In fact, these are strong from what was projected, or last year was that figure stood at $900 million. In fact, analysts were expecting this to be at $1.2 billion as far as AI is concerned. While these numbers seem decent, so do you expect hiring to pick up, especially now that AI seems to be delivering on revenues as well?
I think AI taking away the potential hiring volume is still some time away from us because Indian companies are not quantifying it so much, and the current revenue based upon some of the thumb rule would indicate the volume at this point are pretty low, and these are mostly pilot, not very scalable projects. So hiring impact because of AI would be more like an FY26 thing, not in FY25 in our opinion, and that too in a best case scenario.
Okay, Rahul, because, hirings have been a concern, especially as far as the IT sector is concerned. And of course, fresher pays, which have been most talked about in the past few months itself. But looking at the revenue guidance, which is now at 3 to 6%, the street was expecting that to be between 4 to 7%. But given the geopolitical conflicts that are unfolding and at the pace at which they are unfolding, especially in the Middle East, is there worry in terms of maintaining this guidance?
Yeah, of course. As I said earlier also that if you have a wide guidance, it itself has a lot of uncertainty embedded into it because you're not very clear how things will clear out as the year progress. Even watching out to commentary of some of the largest IT spender, the Big Bulge Bank and some other companies would be a crucial data to watch out for. I think for Accenture, the bookings have been decent, which gives some point of comfort. But we have seen in the past that there are some false starts. You have bookings, but you don't see translation into revenue to that degree. So that kind of element of uncertainty would persist for some time before a much stronger confidence commentary would come out for IT services player. That's what we feel at this point.
All right, so some caution will remain so far as maintaining this revenue guidance is concerned, and that's what you are hoping and expecting will pan out in the next couple of quarters. But let me also ask you, are there worries as far as the US market is concerned? Because the data suggests that US market has performed rather well so far as these revenues are concerned, and primarily it is US market that is really driving the growth. So any concern on that part in that geography, because there are murmurs that there might be a slowdown?
Yeah, I think the recent most relevant big commentary was around the rate cut and the GDP forecast at that point of time for US market has been retained at a similar level. So I think no further worsening or improvement was identified in that meeting. But yes, there are a lot of data which keep giving us that mixed signal. So that worry would continue to languish the performance for some time. So yeah, that remains the challenge. However, there are more reason for companies to consider improved tech spend whenever they see the challenges persist for much longer. So we need to see that how quickly that would come back. Are
Rahul,
we
one final
away?
question. One final question before we let you go. One final question before we let you go, Rahul. Your final word on the challenges that the IT sector is going to foresee in the next couple of months.
I think the biggest challenge is that business, at least from a last year perspective, is slightly improving. I think the challenge is more from a market perspective because markets continue to expect a much faster, sharper recovery while the reality takes its own pace. So I think the challenge is more in terms of meeting the expectation of the markets. But in general, if you look at from a purely business point of view, things are definitely better than what it was 12 months ago.
All right, so you're stating that a sharper recovery may not happen, but definitely things look much better as compared to last quarter. On that note, thank you very much, Rahul, for joining us this evening and sharing your thoughts on the numbers and helping us understand what to make of these numbers.
If you like this video, then like, share and subscribe to ET Now.